Hello and welcome to another episode of Kuvera Insights, where we talk to leading industry experts and learn on how to manage our wealth better. Today we have Raghav from Axis Mutual Fund. He has 25 years of experience in financial industry, driving sales and distribution. He's joined Axis in 2019 as a president and chief business officer, responsible for retail and institutional sales, investment services, and digital and marketing. Prior to joining Axis, Raghav ran the India Bulls AMC as their CEO. And prior to that, he's worked with ICICI, Tata, JF, AMC, and DSP. So, of course, very rich experience in the mutual fund industry. Has probably seen the industry evolve in the last 25 years to become what it is today. So, look forward to this really interesting conversation. So, let's start with, is there anything particular in where the market is right now that kind of makes you believe that a multi-cap is a better option than a flexi-cap? Given that the entire universe is the same, except that multi-cap has minimum thresholds that flexi-cap does not have.
Well, I think the thing is, in today's market, Gaurav, unlike, let's say, a year and a half back, I don't think there's any part of the market which is cheap. Valuations are challenging across the board, right? So if you ask me today, the idea of this product is to have sort of our best ideas being put into best ideas in the large cap space, mid cap space, and small cap space coming in. So it's a very bottom up focused fund rather than a top down focused fund. Maybe 1.5 years back, you could have come and seen that, hey, some sectors are looking cheap from a relative basis. Let's just go and buy those sectors. This is not a top down fund. This is more of a bottom up kind of a fund here. And that's the big reason why I like multi-cap, because today I think you have to go beyond the market current valuation and really look for stocks which are available reasonably cheap. I won't say cheap because there's nothing cheap, reasonably priced, but with a very, very good ability to sustain their earnings, their performance over the medium term. And that is what I think Axis specializes in. So, yes.
So one way to think about this is, right, that you have this fund, a multi-cap fund where 25% is allocated to the top large fund ideas, 25% is allocated to the top mid cap ideas, and 25% is allocated to a top small cap ideas, all under a investing framework. And then you have 25%, which is kind of like a dynamic allocation.
Absolutely.
Right. And how should an investor think about this dynamic allocation, and how do you guys as a fund house think about this dynamic allocation? Do you have certain models that you follow when you think about whether that dynamic allocation should be more large cap or should be more mid cap or should be more small cap, or is it more like a bottoms up stock selection still?
It is bottoms up, Gaurav, because we don't want to constrain the fund manager at all. As you know, every 6 months, AMFI comes up with a new list of the top 100 stocks and the next 150 stocks and then the balance stocks, right?
Right.
In this case, and many of the companies that we have put money in who have done very well, we have had to forcefully remove them from, let's say, our small cap fund or our mid cap fund because they've become mid cap or large cap as the case may be. In this case, I don't have that challenge. I can use that 25% to try and build in.
You can graduate them to the next bucket.
And at the same time maintain my 25%. Number one. So as I said, I can keep the stock through its entire life cycle and I can do those tactical changes also here. But from the balance 25% as of now today, because even though markets have corrected hardly 4% or 3.5% in the last 1 week and counting last couple of days, there are many stocks in the large cap space which have got corrected much more. So from a relative valuation perspective and more from a relative sustainability perspective and the fact that Indian economy broadly is doing well, I don't think there is any two comments or any stress on that. I mean, you'll have
the macro markers are good on the large part. They're good, yeah.
So we would prefer to put that 25%. Currently, the bias is more towards large cap. But having said that, Gaurav, if we really get some, because as I said, markets are very, very volatile. If we get some great trading, we get some great investment opportunity because of somebody making a trade, some FI wants to get out, somebody wants to sell off. I think that's an idea that we will be willing to look at even small and mid. Currently, of course, I think the positioning is to be more, to use that 25% more towards the large cap space. But if you ask me, a 50% mid cap and a small cap exposure in a fund itself is a pretty sizable exposure. So it is something that it's not something to sneeze about.
And where do you think we are and this is kind of a not exactly on multi-cap, but just where do you think we are in the mid cap and small cap investment cycle? I think small cap has a slightly different investment cycle. Mid cap is probably more aligned to large cap, right? Small cap peaked in 2018, then had a correction, and then now they have had a massive rally. Where do you think we are in the mid cap and small cap investment cycle?
I think two things. I think one is fundamental change has happened in small and mid, which I think we saw some time coming. I think if you recollect, in our good old days, the biggest challenge for a mid cap or even or actually for a small cap, even for a mid cap company, is access to talent and access to capital.
Yep.
I think two things have changed dramatically in the last 3 years, but more it's got really fueled in the last 18 months. Is that you're getting a lot of money into ideas, and many of these companies today don't have any stress on capital today. Number two, I think employees are now willing to forego brands and go to startups, and hence, if somebody is able to give them a good value proposition in a mid cap or a small cap company, a personal value proposition, people are happy to experiment there. This is very different from the time, let's say, when I started life 25, 27 years back. I think the whole ambition was to go to one of the larger setups and then grow with that company. Today, people are willing. I mean, I can see that around us. I think my colleagues and all are happy to take risks, especially the younger guys. I mean, there is no harm in trying to work in a small company. If it fails, it's no. I mean, it's obviously stressful, but there's no. I mean, there's no. How do I put it? There's no blot on your life, and so I think
there are opportunities around, right? So you know that if this doesn't work, I can go and get another better.
And
I agree.
The social stigma of sort of working for a company which failed doesn't exist anymore. In fact, I think it's a badge of honor that I tried to do something and it didn't work out.
Right.
Which is absolutely, in fact, it's people give you more credibility for it. But so having said that, those are the two big changes. In terms of the valuation cycle, obviously, as I said, Gaurav, in the beginning of this conversation, I think there's nothing that looks cheap. Small cap from an index perspective looks actually expensive. But having said that, there are a lot of new guys coming in. We're seeing a lot of new business models there. So in both these cases, I will just reserve my judgment as far as expensive or cheap and just say that it's a lot of interesting bottom-up ideas are possible. See, the other thing which has happened is, obviously, which you're all aware, is the government is now encouraging this whole China plus one manufacturing setup. I think China is going through its own stress in the last 18 months, and obviously they lost some public affection because of the whole Corona thing. So there is now a concerted move from the global manufacturing base to try and get out of China, or at least get diversified away from China. It's a big ask because I think what the Chinese have done in the last 20 years is quite incredible, reasonably difficult to replicate in a short period of time, but we are taking steps in that direction.
There's an opportunity there for us to kind of at least make a dent.
Yes. So, like, there are areas like chemicals, batteries, transportation, where I think there are a lot of government incentives which are also being given, and many of these small and mid-cap companies are really rushing to take advantage of that, apart from the larger ones. So it's actually an interesting model right now. So you have a bit of a K-shaped recovery. So the large are obviously getting larger. They're dominating their access, but there is also a fair number of challengers who are also coming in there. And that is the kind of thing that we want to capture in this fund. So you will have your small and mid cap, who in some sense are my challengers. And then, of course, the large cap guys are the most settled, well-established, fast-growing brands. And hopefully so this combination of these two will hopefully give the investor a very good investment experience.
So one last question, Raghav. I think one of the joys of your job is probably to talk to thousands and thousands of investors all across the country. What's the investor mood like according to you? And which, in the past 25 years, which period would you compare it to the most?
So that's a lovely question, Gaurav. Thank you for asking it. I get to meet interesting people virtually, like how I'm meeting you, and physically, like I've met a lot of people in the last couple of weeks. So I've done about 5 cities, almost shaken hands with about 1,000 people. Of course, I sanitize myself after that, make sure they also sanitize themselves and all that. So yes, I'm taking those precautions. I'm fully vaccinated. But I think today, the first thing I want to check with them is what's the current mood on equity. So today, equity, even at this valuation, people are very, very comfortable, right? I think people have made money. They have seen that if you hold on to investments and don't panic, money gets made very fast. This is, in fact, the most sharpest correction and pullback that I have seen in my life. Markets going down 30% in one quarter and then rising again practically 30% in another quarter. I mean, if somebody had gone away for 6 months, nothing would have happened to his portfolio. But the good thing is now people have now started getting more stories like the way I started off. My 12,000 rupees becoming 2 lakh rupees. It's actually there with a lot of people. And, that's that. So equity as an asset class, definitely people want to buy more. It's much easier to buy thanks to people like you today. People want to know more. So many people are now just not going by the fashion just because I put a full page ad in Times of India and say, I have this great product. People are not flocking to me to buy. They're checking, they're looking at our track records, they're looking at what value we have delivered, and then they are investing. So it's a bit of
Right.
a more of an informed investment. My partners obviously are very happy because this is a great period for them. So I think all in all, the mood is great. It is, if I were to put it in the typical research analyst parlance, Gaurav, it is cautious optimism, but the optimism is very much there. People are cautious, obviously,
Great.
because in the last 12 months, there's been like serious amount of money is being made. Uh, Most people are now switching some assets away from, so real estate. What is not selling today? I think gold is yet a big story today. I think people like gold a lot in this country. It's a great store of, even though it's not done too well, people are not putting that much money into real estate as an investment, residential real estate. I mean, earlier the trend I used to see 10, 15 years back that everybody would max out on their home loans. And then obviously they created some more money through equity. They'll go out and buy some more real estate. I think that story is over now. So people are happy to add on to equity right now. And what I've been telling people is just keep a track of your fixed income, because ultimately fixed income is also an asset class. Maybe today not giving you great returns because interest rates are low, but you have to keep some pool of assets there, especially money that you need in the short and very, very short period of time. So if you have like a 3 month, 6 month, 1 year investment horizon, don't be foolish enough to go and try and fund it in some equity or some equity fund. If you make money out of it, it's pure luck, actually. I don't think there's any skill involved in it. So don't do that because it can go down. But that stuff is now very well understood. So I think cautious optimism. And the bigger question I kept getting asked was, hey, what's happening? What do you feel about markets? And then fortunately or unfortunately, this last Friday correction happened. So a lot of those questions also went away. So I must also share some interesting data. We saw huge amount of transaction flow happening on that last Friday. So the investors have become quite smart. They're actually waiting for corrections, and wherever they see. So wherever I see a 500-600 point fall in the market, I get the flows in our system to become much more.
The wall of money is still a tall wall.
Very much there, very strong. And
Very much there. Yeah.
the other aptitude test for me also is the other big asset test is my SIP flows, which have consistently remained and which are gradually growing. They have not gone like this, like markets, but every month, a month there is incremental flow coming. So I think those are the two big trends that I'm seeing right now. Nothing has fundamentally changed. A lot of people have put money into all these equity IPOs and stuff like that. Some have done well, some have not. Most have not got allotment. Most ask us, what do you do about it? I said, in Axis, we don't put money into equity at all. All our money is invested in mutual funds. So when people ask me for a view on those stock, I said, boss, sorry, not the right person to ask. But yes, I think there is a far greater acceptance of equity investing. And when you look at all this stuff we have done, Gaurav, there is just about under 3 crore investors in the entire mutual fund industry, unique investors in India. To my mind, that number can go up 10x very, very fast. So I think obviously that's the number that I think that will drive this industry forward.
Phenomenal. Yeah. Thanks, Raghav. Thanks so much. On being here and sharing your thoughts with everyone. Thank you so much.
Thank you very much for having me.